Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
What's up, everybody? We got another top stock pick of the week for you. It's going to be me and Tracy Reineck. That's Dave Bartosiak. That's who I am. Let's go ahead and take a look at Zacks.com and see what stock I'm talking about. It's Dave. That's right, Dave, just like me. It is a Zacks rank number one strong buy. Check out the style scores here at F for value, but an A for growth, an A for momentum. It's up and round out with a VGM composite score of B. Now, it's officially in the technology services industry, which ranks in the top 17% of our Zacks industry rank. But really, it's a fintech. Okay, so they're going out there and banking the underserved, and it's a departure from your traditional bank. So they don't have the big expensive branches, so they can move a lot more nimbly and with better margins. Now, I just want to point out this price consensus and EPS surprise chart. So don't get too crazy about this whole downturn here, because this is sort of pre-Dave. And what do I mean by pre-Dave? These are like one of those SPACs, like reverse IPO actions, how it came to be. So don't worry too much about this craziness. But what you should focus on is once the estimates start to come in, and you do see that now things have really ticked up and there's growth year over year. And that's not a small number either. You know, we're talking about estimates north of $10 per share on the EPS side of things, which is why the stock's up over 200, right? So this isn't just like a pie in the sky sort of dream here. This is something that's real. So let's take a look at the detailed earnings estimates page, which breaks this down in a little bit more detail. So you can see here, well, actually, let's just look at these PEs, right? So still trading 23.84 times earnings. Granted, on a financial, that's a lot. Look at the industry average, only 9.4 times earnings. Compared to S&P 500, you're basically in line, 22.42 for the S&P, but the difference is going to come in the growth numbers. And we got some of the growth numbers here, but I'm going to break these down a little bit further as we get down along the chart, along the page. So revenue growth, current year revenue growth, 36%. Next year, 24%. So decelerating growth, but still monster numbers. Translate that over to the EPS side of things. Our Zacks consensus estimate for the current year is $8.74. That's 66% growth over the previous year. Next year, that slows to 32%. But like I said, up over $10 at $11.56. And those estimates have gotten increased lately. So you got two estimates, two analysts coming up in the ante for the current year and next year over the course of the last 30 days. Look at that impact to our Zacks consensus estimate. It's gone from 665 to 724, now 874 for next year. Moving in the right direction. Same thing on next year's side, 812 to 904 to 1156. So now you're beginning to see why the stock has rocketed higher and why we're paying 23 times. Looking on the most recent surprises. So last quarter, 61% surprise. Quarter before that, 87% surprise. Quarter before that, more than tripled estimates. Quarter before that, this is kind of the number. We're 94 cents better, 95 cents better, $1.02 better, 89 cents better. So on average, over the course of last year, it's beat earnings by nearly $1 each quarter. So that's why you're seeing estimates the way they are. That's why you're seeing those valuations the way they are, because people are comfortable with paying more because they're seeing the growth in this fintech. And it is a lot of fun to see. They've got not only sort of the consumer banking side of things, but they also have lending and things like that, which is why they're rocking and rolling right now in fintech. And people, as much as everybody loves big banks, I guess, there are a whole host of people that don't love big banks, right? And those people are already underserved. And that's where Dave can go ahead and swoop in and offer them these products. And that's why they're rocking and rolling. And that's why they are growing. All right, Tracy, that's all I have for my top stock pick of the week. What have you got for us over in Chicago?
Thanks, Dave. So my stock is on the cybersecurity side. It is on identity security, which is a hot thing right now. We're all trying to keep ours safe, and so are every company. And it's CYBR software. So CYBR, ticker CYBR, has been one of the hottest stocks. And now it's got the Zacks number one rank, strong buy, which means those analysts are raising those earnings estimates. Now, it's been doing a couple acquisitions recently, and those are being accretive immediately to earnings revenue side. So that is also helping CyberArk, but it's not taking much right now. It is growing revenue in the double digits. We're going to take a look at that. And subscriptions, big part of the software game, and they are growing that 50% in the first quarter was the subscription revenue. 60%. Wanted to make sure I had that right. Now, a lot of these software companies also with great free cash flow, and CyberArk is one of those. It gave guidance of 300 million to 310 million for the full year here. And it in the first quarter had 30% free cash flow margins. That's what we like to see. So why is it a Zacks number one rank? Let's take a look and see. Okay, so we are looking at the quote page for CyberArk software here. And you can see right off the back, it's in the top 8% of the industry rank. That's really strong. We got the number one rank. As you might suspect, F for value on the style scores, A for growth, B for momentum, a C overall. But nobody should be surprised that F for value, because anything in the security area has been red hot, even though the earnings are also red hot, and none of these stocks are cheap. So scrolling down, price, consensus, and surprise, one of my favorite charts. You can see great earnings surprise track record, also beat again last quarter by 24%. That was the first quarter. And then look at these earnings consensus, just up and to the right, very steady growth. Maybe a little bit of weakness here in 2027, which is already showing up on our chart. But look at 2026 looking good. And with the strong guidance, the analysts are raising. So let's see what is happening there with the analysts. We're going to look at the detailed estimates page, because that's where you can see what everybody's doing. Although you can also see it now on our redesigned quote page there. But I like to scroll down and actually see on the earnings agreement here on estimate revisions. You can see 12 up in the last 60 days, 3 even in the last 30 days. They did have earnings, so that's where you got all this bullishness. And then they had an investor day as well. And then they've been announcing these acquisitions. And the latest one closed in February. That one is, again, accretive as it's going forward here. But you can see the earnings estimates just trickling higher here as the year is going on over the last 90 days, up to 381 from 365. Even next year, 479 from 464. We did have a few analysts, adjusting here. So we do have some that have cut, but that's pretty well into the future here still, even though we are in June of 2025. Nice double-digit earnings growth, 25.7% for this year, 25.7% for next year. Expected. And then on the sales side, 31.9 on the consensus for this year, almost 19 for next year. Now, as I said, it's not cheap. If you scroll up here, you'll see PE 101 times. We know this, PEG of 4.1, but we're willing to pay up for the growth here. And we're willing to pay up for it because of this chart and what it's looking like here. Very few companies able to do this with all the uncertainty out there, and to do it consistently as they have been able to do 2024, now 2025, 2026, and it looks like on this chart, 2027 with another big gain. Now, year to date, the stock's up 19% versus 3.3% for the S&P. Over the last year, it's up 57%. So that's going back, way back over here. And S&P up just 10.4. So it's really outperforming. That's why you got to pay up for it. But these security stocks, especially on the software side, very hot, all of them very hot, and very strong earnings and sales growth because, again, this is the area everybody needs some protection in. So that's CyberArk Software, ticker CYBR, with that number one rank, double-digit earnings growth, not a value, but you are paying up for that growth, and the growth is there. So as always, every week we're bringing you two Zach's number one ranked stocks here on the top stock picks of the week. These are rare. We cover thousands of companies with the Zach's rank, and only about 240 to 250 of them are Zach's number ones. These are two of them. So be sure to subscribe to get all of our top stock picks of the week and our other videos that also feature these top strong buy stocks. You can get us on YouTube, get us there at zax.com/YouTube and on our X and other social media sites, but be sure to get it somewhere. And we'll see you again next week with some more top stocks.